Well, the official reaction has been quite measured. Um, you know, from state media, you see commentary talking about, uh, the possibility now of what they're calling a win-win outcome for the U.S. and China. It's a real contrast to the rhetoric going into these talks, which was very defiant, almost bellicose from China. But clearly something changed, and something changed pretty dramatically between the end of last week and the sit down in Geneva. Obviously, there's been a lot of volatility, a lot of uncertainty around business projections. It was remarkable that in April, Chinese exports grew 8%, uh, not as much as they had in March when exporters were front loading a lot of orders to the US, but they were still up pretty substantially, um, even in the first month of the trade war where we now have a truce. I think the expectation now is that a lot of exporters will be looking at this 90-day period, the next quarter, and where they can, locking in shipments and trying to get goods to the U.S. Ahead of a number of key seasons. It's probably too late for the back to school shopping period, but there's Halloween and there's still Christmas ahead. I mean, at 30%, which is where they sit, 20% being the tariff that President Trump imposed for uh, what he sees as China's failure to do enough to rein in fentanyl precursor exports. 30% is still a high number. It's still an existential threat for a number of exporters. You saw a huge relief rally in financial markets yesterday, but for exporters who are having to do business planning, 30% is a number that they can't absorb. And so for shipments that are going out, they're going to have to figure out how to share the pain with with the purchasers in the U.S. In order to make it work.